Hello, welcome to the European Open briefing for Friday, November the 18th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we're seeing a quieter day on the week's last trading day with not a lot of data on the economic calendar, but as you would expect, it's still all about the dollar. The US currency continues to power ahead. We had some relatively hawkish remarks by Fed Chair Yellen yesterday, and we had some very strong data releases out of the US. US Treasury yields continues to make fresh highs, and the dollar is now above the 110 yen level. The euro, on the other hand, continues to come under pressure. It's fallen below $1.06. The dollar index, which measures the US currency against a basket of other major currencies, hit its highest since March 2003. And of course, the stronger dollar is having a negative impact on commodities. Both gold and crude oil prices are sharply down today. So let's start with the dollar index. We can see here in the chart, it hit a 13.5-year high of 101.37. It's now beaten the high that it had achieved last December when the Fed last raised rates, and it's looking more and more likely that we are going to get another rate hike this December. Yellen was testifying before the Joint Economic Committee in Congress yesterday. She said that a rate hike would be appropriate relatively soon, and she also added that the Fed would change its outlook as necessary if the incoming new administration in the US went ahead with the proposed fiscal stimulus. We also had some fairly strong data. US inflation was the highest in 2 years in October, although the core rate was slightly weaker. Nevertheless, we are seeing inflation maintaining that uptrend that began a few months ago. We had some housing data as well that was also strong, and then the weekly jobless claims dropped to a 43-year low. So all of that is pointing to a strong labor market and overall strengthening economy. So all of that is pushing up the dollar and US Treasury yields. Treasury yields hit fresh 11-month highs, both the 2-year and 10-year government yields. Against the yen, the dollar is at a 5.5-year high against the yen at above 110. It peaked at just under 111 yen. The Bank of Japan made some comments today. Yesterday, it had conducted its first fixed rate operation to drive down Japanese government bond yields. Bank of Japan Governor Kuroda said that the reason why they took action was because the 2- and 5-year bond yields rose too rapidly following the post-election sell-off that we saw in government bonds. And Kuroda said that the bank will conduct fixed-rate operations in an unlimited amount if needed. And it does appear that it has had some impact on the bank's actions on keeping the yen down, because even the Japanese government bond yields rose as a result of the bond sell-off, and of course the Bank of Japan wants a weaker yen. If you look at the euro and the pound, the euro is coming under intense pressure. It touched a fresh 11-month low, dropping below $1.06 for the first time since December 2015. ECB President Mario Draghi was speaking not too long ago, quite a short while ago. Well, he may still be speaking. He's giving a speech in Frankfurt. He said that although the Eurozone recovery is becoming more broad-based, he said that this recovery is still reliant on accommodative monetary policy. That could be a signal that the ECB will likely extend its asset purchase program in December, when the ECB is next due to hold its policy meeting. And yesterday we did have the October meeting minutes where the ECB again hinted that they're likely to review its asset purchase program where they will have new projections available. So we could also, and in addition to the extension of the QE program, we could also see some changes to the parameters of the asset purchase program. So all in all, we're likely to see some action or some changes in December by the ECB. The pound is also falling. The pound briefly fell below the $1.24 level before jumping back up again. We had some very strong UK retail sales data out yesterday. It was the highest since 2002. Retail sales were up 7.4% year on year versus forecasts of 5.3%. Although the strong dollar appears to have offset that very strong data out of the UK, as you can see, the pound is pretty much falling in line with the euro. Let's have a look at the Chinese yuan, because the Chinese yuan continues to make fresh lows. It hit an 8.5-year low of 6.8916 per yuan earlier today. We did have some fairly strong housing data. House prices in China were up by 12.3% compared to a year ago in October, although on a month-to-month basis there was a slowdown from 2.1% in September to 1.1%, and this is because the government has taken measures to curb house sales in China because of a booming property market. So on the one hand, it is positive that the housing market is being contained because of the property bubble would be negative. On the other hand, this could have some negative impact on GDP growth. But the yuan, on the other hand, is mostly, like all other currencies at the moment, is being driven by the strong dollar. So we're seeing further declines in the yuan. If we look at commodities now, we can see that both gold and oil are down. Gold was slightly up yesterday, though it hit a fresh 6-month low today of $1,203.86 an ounce. Crude oil is also down, and again, crude oil did benefit a little bit early in the week from renewed hopes of an OPEC deal to cut output when OPEC has their formal meeting at the end of the month. Although the stronger dollar is hurting both commodities today. If we look at the Mexican peso, which is both oil dependent and also close trading partner to the US, it's weaker today, even though the Bank of Mexico did raise interest rates. Markets were expecting a rate hike by the Bank of Mexico of 75 basis points. They only raised it by 50 basis points to 5.25%, and that's why the rate hike in Mexico had limited impact in supporting the Mexican peso. Although, having said that, the Mexican peso is off its all-time lows, but it could only be a matter of time to make a fresh lows because of expectations that Trump will tighten immigration policy and possibly even try to renegotiate its trade agreement with Mexico. Let's have a quick look now at the calendar. We can see it's a very quiet day. We did have some retail sales out of New Zealand, which were mostly in line. We also had some pretty surprises out of Germany, which came in much higher than expectations, although of course that had little impact on the euro. We're going to have some Eurozone current account data later today. But in the US session, the only major data is going to be Canadian inflation figures. That's it from me. Thank you very much for watching, and have a great day.